Well, joining us now is Tim Evans from Longleaf Trading Group. He joins us live from the CME in Chicago. Tim, hello to you. Thank you for being with us. Would just love to get your take on today's trade. We are seeing the S&P 500 turning flat as we do head into the close.
Hi, nice to be with you today. Yeah, I mean, I think really the market effectively had a bit of an overreaction, with respect to, the failure of conservatives and Republicans to get through the health care bill. Obviously, while not helpful, to continue to promote the idea of the Trump trade or Trumpflation trade that's fueled the market since November, at the end of the day, I think it's doubtful in terms of Trump's ability to move forward with, the tax reform plan that's really behind a lot of the optimism that we've seen in the market for the last, 3.5 months.
We had Trump trade, now we have the Trump tantrum. But as we know, Tim, often these tantrums are short-lived. Do you see a resurgence of flow back into these markets in the near term?
Yeah, I mean, yes, I do. I think really what it's going to come down to is, what kind of coalition is Trump going to be able to build as he moves forward, with his tax reform plan. Leaning on conservatives to get this done, I think is going to be a tough pull. But at the end of the day, if we go back and kind of consider Donald Trump as a person, before president, he was a Democrat at one point. He's not, a hardliner conservative. So, I don't think he has a lot of, he's not a principled conservative in the sense that alienating conservatives are going to be a problem for him. I think reaching across the aisle and bringing some Democrats on board to, to get his version of tax reform done, fits the mold of Donald Trump better. So I'm pretty optimistic in terms of Donald Trump being able to, get a tax reform package passed.
So let's talk banks then. We did have a chart up on screen a short while ago, certainly flagging the financials really dragging on Wall Street at the moment. And this is, as you've suggested in your morning note, of concerns when it comes to that tax reform bill.
Yeah, everyone's talking healthcare, but, healthcare was just more or less a litmus test, to see Donald Trump's ability to move major legislation through the American legislative process and become signed law. But at the end of the day, what the market's really waiting on is the big one, and that's tax reform, because at the end of the day, again, that's what's ultimately going to be driving, potentially higher levels of corporate profit, which, obviously has the banks or has had the banks, moving higher at the rate they've been moving. So, I think that's really what it's ultimately boiling down to. The banks have reacted negatively to that. But I think as the days move on here, I think cooler heads are going to prevail, and we're ultimately going to see that, the failure of healthcare probably isn't going to doom tax reform.
The US dollar, meanwhile, we have seen it moving to its lowest level in 4 months. How does this feed into perhaps the broader trade picture for the US?
Well, the dollar obviously has caught a bid for a variety of reasons. I mean, the threat, or not the threat, but the idea that the FOMC is going to raise rates 3 times this year, possibly even more, obviously has benefited the dollar. But also investment dollars flowing to the U.S., with the idea that, we're going to see better levels of GDP given the stimulus of all the various things that, Donald Trump's administration would be able to get through, but also of, a big infrastructure program that, the market kind of had already priced in. There was a strong likelihood of happening. So, this thing has been pared back a little bit as, the likelihood of all this occurring has been discounted, but also the fiscal side, the market needing to discount the idea that all of this will happen, the market's also having to kind of re-examine, the likelihood that the Fed ultimately will raise rates 3 times or more. So, the dollar's going to be on the defensive, but, I think the lows today that we tested, we filled a gap going back from November that should act as some technical support here in the near term. I'm not looking for the dollar to continue much lower here over the near and intermediate term.
Just on that idea of the Fed, Tim, as you flagged, market now pricing in a 50% chance that the central bank will raise rates 3 times in 2017. I hate to simplify, but That also flags that there's still 50% of the market who don't see that happening. What could be some of the hurdles that the US central banks still have to face to enact those 3 rate hikes?
Well, I mean, you know, the Fed's job is, you know, to make sure there's job stability and price stability. You know, the idea that the fiscal side would finally be in play after all those years of gridlock under the Obama administration and, you know, the Republican Congress, you know, that we would finally be able to move stimulative legislation, you know, that would allow the Fed ultimately to raise rates. You know, obviously, the only kind of stimulative tool that we had was quantitative easing and very low interest rates. But, you know, with the idea that the Trump administration would add some of that fiscal policy, that would give the Fed the ability for the first time in quite some time, the ability to raise rates. You know, I think the Fed is obviously a very cautious Fed. I mean, they've proven that year over year over year. You know, so I think they were ultimately going to be waiting on some of that fiscal stimulus to pass to give them the freedom to do that. And so I think the market's looking at that, understanding their cautious nature, you know, and discounting the likelihood that they're, you know, going to be anxious about raising rates if some of these programs can't get passed.
We're also seeing a level of caution coming through in investors themselves, Tim. We've got gold prices moving higher, bonds also on the move, as investors really seeking to move to those safe haven assets within this uncertain environment. Also, we're seeing the volatility index sort of finally having a rocket set up under it again and hitting $14 for the first time in some time. What is the sort of investor sentiment or mindset that you are seeing at the moment?
Well, I mean, you and I have actually talked about this the last 2 or 3 weeks. You know, the thing is, the market got very certain in a very uncertain world. You know, Trump was an unproven commodity, you know, in terms of moving legislation, and the market got very aggressive in pricing in that a lot of these things were going to happen. You know, and given his style and given his, you know, lack of a proven track record of being able to get things done in a very complicated government system that he operates in now. So, I mean, I just think this is a lot of the uncertainty kind of revealing itself, and a lot of market participants, again, you know, recognizing that a lot of the certainty that they had priced in, they probably shouldn't have priced in so soon and so aggressively. You know, so we're seeing a lot of these safe haven assets like U.S. Treasuries, we're seeing gold, we're seeing European Treasuries, you know, all catching a bid, you know, as the benefactor of this uncertainty that's now back in the market.
Tim Evans, we are out of time. A pleasure as always to have you with us. Thank you so much.
Thank you for having me.